The focus of this lesson is credit card statements. The first thing we need to do is identify what information is provided on the credit card statement. In the upper left-hand corner, we could see the customer's first and last name. In the right-hand side, we could see their address. Below that, we see all the account information, the billing date, when the payment is due, all the transactions that were made during this billing cycle, as well as a summary of how much was owed previous to this statement, any payments or credits, the new purchase, late charge, the finance charge, which is the interest, right? The new balance that will be carried over to the next month, and how much must be paid by this payment due date. You'll also see a summary of the average daily balance, the number of days in the particular billing cycle, the annual percentage rate, and the monthly periodic rate. At the bottom left, you can see the total credit line available. So this is the amount of money that the person can borrow, and then the total available credit. You'll notice here that she has borrowed most of the money that is available to her. I would say avoid this. Example 1. The summary portion of Jane Sharp's credit card statement shown on the previous page looks as follows. Okay, we want to A, explain how the new purchases amount was determined. So let's start there. So if we look here, we could see the new purchases amount is $284.45. Now the question is how does that amount get determined? If we look closely at the credit statement, we can see that this section of the statement shows all the transactions that occurred. We can also see that some of these transactions were purchases, right? And some of them were payments. Now, if we're looking at just new purchases, we're going to focus just on the ones that were actual purchases. So we could see that she has a purchase here, $75, $31.85, $139.10, and $38.50. Now I can tell that all of those are purchases and not payments because they are positive, meaning they're increasing the balance that Jane owes. So in order to get that total, we're going to take our calculator and we're going to take the 75, the 31.85, the 139.10, and the 38.50 and simply add them together. We can see that this 284.45 matches the 284.45 for new purchases. So the new purchases amount was determined by adding up all of the transactions that occurred during the billing cycle. B, explain how the new balance amount was determined. Okay, so that is this over here, this $363.48. Okay, now in order to get the new balance, we must think about all the transactions that occurred. Now, we know that at the beginning of the month, she had a previous balance of $150.50, right? And then she made payments, $75, bought some more stuff, new purchases at $28.45, had a late charge of nothing, no late charge, which is nice because she paid on time, had a finance charge or interest of $353. So now the question is, what do we do with those? Well, let's think about what would happen mathematically speaking, right? So we know that the previous balance will be what we start with. And we know that if we make a payment, that amount of money is being removed. So we're going to subtract the $150.50 minus the 75. Now, when we make new purchases, that means we owe more money. So we're going to add this amount on. So we're going to do a plus. Now, there are no late charges, so we're going to skip that. And then with the finance charge, that means we owe more money. So we're going to put a plus. Okay? And if I do these calculations, I should in fact get the new balance. Let's check. So we'll start with the $150.50. We're going to take away the $75 we paid. We're going to add on the new purchases, the $284.45. And then we're going to add on our interest, which is the $353. And we can see that our new balance is $363.48, and that does in fact match what we see here. So we found the new balance amount by taking away the payments, adding on the new purchases, and the finance charge. to the previous balance. Your turn to try. Suppose you create the following spreadsheet that models the statement summary and input the values in row 2. Write the spreadsheet formula to compute the new balance in cell F2. Pause the video to give it a try. Example 2. Pasquale has a credit line of $15,000 on his credit card. His summary looks as follows. How much available credit does Pasquale have? Okay, now when it says credit line, that's the amount of money he has available to him. That's the amount of money that the bank is willing to loan him. So we know that he can borrow up to $15,000 or spend up to that amount of his credit card. So we want to know how much he has available. Okay, so first off, we need to figure out how much he currently owes. Okay, so we can see here that his previous balance was $4,598.12. We know that he's paid $4,000 of this. That's smart. He's paying off a lot. So we're going to remove that. So 4,598 plus, or in 12 cents minus 4,000. But then he made some new purchases, about $1,368. So we're going to add those on. He paid late when he made his payment. So we're going to add on a late charge. And then he owed interest $5.78. So let's go ahead and calculate. So we start with his previous balance, which was $4,598.12. We're going to remove his payment, $4,000. We're going to add on his new purchases, $1,368.55. We'll add on the late charge of $20 and then add on the finance charge of $578. Okay, so we can see that he currently owes, I'm going to put here for the new balance. Let's check our calculator again. Looks like $1,992.45. $1,992.45. Now, that's how much he currently owes the bank. Okay, now we know that he has a credit line of $15,000. Okay, so in order to figure out his available balance, right, we are going to take how much he owes and subtract that from how much they're offering him. So they're offering him $15,000, but he owes $1,992.45. If we subtract those two numbers, we should get how much he has left. So 15,000 minus $1,992.45. So we can see here that he has $13,007.55. $13,007.55, and that is his available balance. So that's the amount that Pasquale can still borrow. Okay, now it's your turn to try. Rhonda had a previous balance of $567.91 and made an on-time credit card payment of $567.91. She has a credit line of X dollars and made purchases totaling Y dollars. Write an algebraic expression that represents her current available credit. Pause the video, give it a try. Okay, example 3. Myrna is examining the summary section of her credit statement. Myrna has checked all the entries on her bill and agrees with everything except for the new balance. Determine where the error was made. So let's go ahead and calculate. So we know that in calculating our new balance, we have to take the previous balance. We have to remove payments, so minus. We have to add on the new purchases. We have to add on the late charges and the finance charges. And let's see if what we get is the same as what the bank calculated. And let's see if we can find the error. Okay, so let's take a look. So we started with $1,748. She paid $100 that month, plus $800, plus $915, plus $19. Okay, so according to the bank, she owes $2576.15, but according to her calculations here, based off of all the information, it is $2476.15. So it appears that the error is here, because when we look at those numbers, we can see that the difference is $100, and this is the location where we see $100. So we might argue that the bank did not process this. Right, there's our error. All right, your turn to try. Determine the error that was made using the following summary sheet. Pause the video, give it a try. Now it's your turn. Grab your financial algebra textbook, turn to page 191, complete 2 through 9. Submit your work to Canvas to get credit.